I'm Brittany Lewis with Forbes Breaking News. Senator Amy Klobuchar took to the Senate floor Wednesday to discuss health insurance credits in the American Rescue Plan. The Minnesota Democrat noted that these enhanced tax credits will expire at the end of the year. Klobuchar warned that if Congress does not make this tax credit permanent, quote, millions of Americans will have the rug pulled out from under them. Take a listen to her explanation.
Mr. President, I come to the floor today on behalf of 9 million Americans who directly benefited from very important health insurance credits in the American Rescue Plan, credits that are set to expire at the end of the year if Congress doesn't act. And I don't believe enough attention has been focused on this issue. Last year, in March of 2021, we came to this very chamber and passed the American Rescue Plan, which provided a crucial lifeline for so many families. We eliminated health insurance premiums for low-wage workers making less than 150% of the federal poverty level and expanded eligibility for health insurance tax credits to middle-class families and guaranteed that health coverage would not cost more than 8.5% of a person's income. The American Rescue Plan also increased the size of the tax credit for all eligible income brackets, putting more money in workers' pockets. As a result, ACA health insurance premiums were brought down by an average of $50 per person per month, and people in both New Mexico and in Minnesota took great advantage of that. As a result, a record number of Americans, 14.5 million Americans, are enrolled in the Affordable Care Act health insurance plan. That's 2.5 million more people that signed up in a single year than ever before. In my home state, that translated to a record low uninsured rate of just 4%. That means 96% of Minnesotans have health insurance, which is a great improvement over where it was. Millions more Minnesotans and Americans now have the peace of mind that comes with affordable quality health coverage. Eligible households in Minnesota have an annual average ACA tax credit of $3,600. That's $3,600 freed up for housing, gas, and groceries while maintaining access to health care. But unless Congress acts to make the enhanced family-friendly tax credits currently set to expire at the end of 2022 permanent, millions of Americans will have the rug pulled out from under them, likely seeing a double-digit hike on their health insurance premiums. Karen Tumulty, columnist for The Washington Post, called it a ticking time bomb. If these tax credits are not made permanent, 70,000 Minnesotans, or 61% of Minnesota families purchasing health insurance on their own, could see a 35 to 41% increase in their health insurance premiums. And over 10,000 Minnesotans could lose their health insurance tax credit in 2023 unless Congress acts. In my state, Americans between the age of 55 and 64 would be most affected. And you think about this with cost issues and inflation and all the things people are already facing. Right now, a 60-year-old Minnesota couple with a household income of $75,000 is saving $773 in monthly premiums. Taking away those tax credits would increase their annual health spending by at least $9,000. That's like taking away multiple paychecks, Mr. President. It's no wonder that Americans overwhelmingly support making these tax credits permanent. Doctors and patients have called on us to protect these historic gains in affordability, coverage, and equity. Families can't afford to go back to paying upwards of 20% or more of their monthly income toward health care premiums. This is important for patients, and it's also important for providers. We know, hearing when we're back home, that many hospitals are stretched thin right now, and putting millions of health care for Americans in jeopardy is going to create a lot of volatility as patients are forced to disrupt their care and cancel procedures. At a time when so many families are struggling to make ends meet, we just can't sit back and let those ACA tax credits expire. More Americans insured is good for patients, good for families, good for communities, and good for our country. And I would note one other thing I would do when it comes to health care, and that is making sure that we allow Medicare to negotiate prices under Medicare Part D for pharmaceuticals. So while our communities are facing the potential of this, what the Washington Post called ticking time bomb, We also must act when it comes to pharmaceuticals, because those prices are also going up. So I have just presented two really straightforward ways that we can help families with costs when it comes to health care. One is making sure that we keep in place the tax credits that protect middle-class families in this country. And the second is to make sure that we allow Medicare to negotiate better prices under Medicare Part D. Because when you look at what's happening right now, we continue to see major drugs go up, go up 200%, 300%, to the point where we are already paying double what they pay in Canada for a significant number of drugs. For Minnesota, that is right across the border. And we must allow, in my mind, reimportation of less expensive drugs. But the biggest game changer would be to lift the ban that the pharmaceutical companies got in place in law that says Medicare, representing tens of millions of seniors, is not allowed to negotiate cheaper prices. And that's what the VA does, and it's been really good for our veterans. We should allow the same help for 46 million seniors. It will be good for all Americans because it'll bring down the taxpayer expense and part of the payment of drugs, and it'll be good for individual consumers. So let's get these two things done. Thank you, Mr. President. I yield the floor, and I note the absence of a quorum.